Hello and welcome to this webinar. I can't really say the time for us here in the UK. It's the afternoon. I know it's lunchtime-ish in the States, but it's basically there's a webinar that we've put together for what we call the US session, and we've called it day trading because it's really looking at various different markets. Looking for a trade on an intraday basis. We will be looking at a little bit of Forex. We've got the indices up. Maybe we'll have a look at gold. And I don't think we've got any time to look at some stocks today. But that really doesn't matter because the methodology that we use in these sessions, you really can apply to any market and in any time frame. But before we start, may I just draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be an extremely risky business. So please don't ever think of using money that you cannot afford to lose. Now, in the session, those of you who come along regularly will know I run this session together with my husband, David. Some of you may have heard him speak before we started. And as I mentioned earlier, the methodology that we are going to be using, in fact, we're using all our trading and investing, is a volume price analysis. And it is looking at the relationship of the price action and the volume to basically determine where the market's going next, that's really all we want to know as whether you're a trader or an investor. The methodology is detailed in the various books that I have on Amazon. This is the original book. It's published as in English, but it's also published in Chinese, Japanese, two versions of Chinese and Japanese. And in fact, I heard from the Chinese publishers today, the mainland China publishers. We hadn't heard from them since February, David. Yes, because of obviously the problems with the coronavirus that they have had over there, and really didn't know what the sales had been in China. But they are absolutely delighted with it, and I occasionally get an email from a Chinese reader, very kindly thanking me for the book and etc. But the publishers are delighted. It's still selling very, very well in China. On Amazon as well, what we've done is you can have the book and as a little box set, as it was. There's a digital box set, and it basically is the book itself, and then there's an accompanying book with worked examples to show how you can apply the methodology, primarily to stocks, but there are indices as well, and there are some commodities. There is a Forex specific one as well. And what we also do is we have the methodology and we support them with our indicators from Quantum Trading. This is the site for the indicators. The indicators available for MT45, NinjaTrader, TradingView, and also TradeStation. We tend to use in this session, we tend to focus much more on NinjaTrader because that's where we've got the futures on there. But I've actually got my MT5 platform on. I've got a couple of things to show you with regard with Forex, which also has applications for the broader markets as well, because all the markets are interconnected. What happens in bonds is going to have an effect on equities. What happens in equities will have an effect what you see in the Forex market, and obviously with commodities as well. All the markets are interrelated, and as a trader, as a day trader, it doesn't matter what you trade, you have to be able to first of all, you have to understand that, but you also have to do a little bit of what I call cross-market analysis. And if you haven't got these instruments on your broker platform, then certainly go over to investing.com, and the first thing you have to look at is what is the sentiment for the day. I mean, we've had huge moves in the markets since this crisis, this health crisis has erupted. The Dow's up 1,000 today. At the moment, it was a little bit went down a bit. Nasdaq's up 126, and the S&P is up 94. And as you know, if you've been watching the markets on a daily basis, the circuit breakers have come in both to the upside and the downside. Critically, the VIX, as we've got here, is still at 60, very, very elevated, which tells us that the markets are in a panic. Probably not as panicking as they were a few days ago when that was over 90, the levels that we hadn't seen since 2008. And really, the whole market, what is happening at the moment, you can only judge through the prism of this health crisis that we have at the moment. And it's really governments have got a trade-off between fighting the disease without crushing the economy. And it's really the jury's out as to how we're going to emerge from this in the next coming weeks and months. Fundamental data is obviously coming out, and it's a case of how bad it is. There's no kind of benchmark for what is going on at the moment. There are going to be winners and losers. Who are the winners at the moment may not be the winners in 2 or 3 months' time. We've had the Fed come in, and now we have this agreement in the States for this. They call it a stimulus package, but it isn't. It's really much more a rescue package. Right, so that's that is the landscape. That is the market environment that we are trading. And essentially, what we are also going to do in these sessions, we put these sessions as a little series. It's this week, next week, then it's Easter, and then we're going to be back again. VPA, volume price analysis, was really inspired by the work of Richard Wyckoff. And those of you who are on our Forex program or have read the book will know that there are 3 laws that Richard Wyckoff came up with. One of them is the law of effort and result, cause and effect, and supply and demand. And basically what these 3 laws do is they, in a very elegant way, they actually frame the chart for us. They once you understand how these laws operate and what they tell us, you will be able to recognize and apply them to the chart. So for example, supply and demand, sometimes it's called accumulation and distribution. It's those points on the charts where you are likely to get a reversal. So immediately well, if you recognize that, then, well, the chart's, am I going to get a reversal? Am I a reversal trader? Is this an opportunity to take a trade? Cause and effect. What do we mean by cause and effect? This is a very interesting law. Essentially, what the law says is the longer you have a cause, then when there is a break, when there is a shift away from what is happening, the effect will be that much greater. And the easiest way to understand is congestion phases. When a market is in a congestion phase, or a time frame is in a congestion phase for a long time, when there is a break, the greater will be the effect, the stronger the trend, as it were. Assuming, of course, that it is not a fake out. And how do we tell that it's not a fake out? Well, this is where the law of effort and result comes in, because when you see a move on your chart, a price move on your chart, if it's not supported by volume, by activity, by participation, then you know that move is not valid. It's not a genuine move. You get it's an anomalous move, if you like. So we're going to use these sessions much more to look at what's happening on the charts through the prism of Wyckoff's 3 laws. As I said, they are part of VPA. As our inspiration for volume price analysis. Volume price analysis also, we actually use candles. Wyckoff would have used bars, price bars. We use candles, candle patterns, and we also use support and resistance, which is hugely important. Support and resistance through with price-based, but also volume-based. And what I also want to say about cause and effect, it also brings in the element of time. As I said before, the best way to see this is on the chart. And once you understand these 3 laws and how they apply to a chart, to give you a narrative of what is going on the chart, you can then decide, well, actually, do I like, do I like to be a reversal trader? Am I looking for those areas where supply becomes demand, demand becomes supply, there's accumulation, distribution? Am I looking for a reversal? Or am I much more, do I really like to look at maybe congestion phases, pauses on the chart, and look for those, those breakaways where those trends, maybe the primary trend is going to continue higher, maybe there's a reversal from primary to primary, or is there a tradable secondary trend? Because with time, not only is there time as part of the cause and effect law, but there's also time in terms of multiple time frames. But as I said, that's just the explanation. It's much easier when you see it on a chart. It will actually become a lot clearer, and the quantum indicators that we've developed really support this methodology, this philosophy, this belief in how the price moves. Right, the reason I've come to the Forex side is just a couple of things. These are the specific indicators that we use to trade, to help us trade Forex, and all these lines here represent an individual currency, and the currency really we always need to watch more than no matter what you trade is, yes, it is the dollar, but it is actually the Japanese yen. This is this magenta line. When the Japanese yen is being bought, we know the market is not particularly receptive to risk. It's going to be in a risk-off mood, if you like. When the Japanese yen is being sold, then we know the market is likely to be rising. Money is flowing into riskier assets. This indicator, yes, it measures the strength, the relative strength and weakness of individual currencies, but it's also telling us where the money is flowing. If it's flowing into the Japanese yen when it is rising, we know the indices, markets are not going to be very happy. When it's being sold, we then know that there has been a shift in sentiment, and the currency pair that probably reflects that more than anything is the Aussie yen. This is the blue line, and with the yen is the magenta line. Now, what's interesting is we look at the daily chart of these lines. It's very interesting. The Swiss franc is up here, another safe haven currency. The dollar, which has been selling really, just going ballistic over the last week or so for all sorts of reasons, safe haven, but also because of there's a shortage of dollars, and that has all sorts of implications for the credit side of the market, which will also cause a problem with stocks and sentiment. But the dollar has backed away from its highs, and we can see here the yen is falling, the Aussie is rising. This is on the daily chart. Doesn't mean this is going to be in a straight line, but it's kind of telling us that the market is desperately trying to find a base and come out of this fear and hysteria that we have seen in the last week or so. That will depend whether it can continue on this way, really depends on what's happening on the medical side. So that's how we look at it in terms of this cross-market analysis. We've looked at the VIX, we've looked at Forex. I haven't got the bonds up here at the moment, but you'd also look at the yields on certainly the 10-year bonds. And very quickly, this is the dollar index. I actually happen to have it as a standard chart on my MT5 platform. You can see here the dollar was selling off. We had practically a V-shaped move in the dollar, went right up to 103.71, and now it's coming lower. Generally speaking, when the dollar is selling, you've got a weaker dollar. That tends to be good for stocks and good for stocks, basically, for equity markets. So wanted to make this a little bit longer, this introduction, because if you're going to come along again, which I hope you do, and I'll have some slides next time just to sort of make it quicker. We're going to be looking at the market, as I said, through these three laws, what they tell us, how they can anticipate the price action, how you can apply them to your own trading. Because the beauty about VPA and Wyckoff is it's a base methodology, and on top of that, you can add your Fibonacci, you can add your Elliott wave, you can add your Wolf waves, you can add whatever your Gann. It doesn't really matter because you will have a fundamental understanding of what the narrative is on the chart at this very moment, and it will also dictate whether your tactic that you like to use, are you a reversal trader, are you a breakaway trader, is the chart in an ideal setup, if you like, for that particular trading tactic. So I'm just going to pass over to David. If you've got any questions, please just put them in the chat box. I'm more than happy to answer them. Either I'll type an answer or I will answer them on air. So I think I can hear David clacking away in the background. So obviously some of you have already been doing that. So thank you so much. And one day, you never know, I might unmute you and actually talk to you directly. No, I won't. I won't do that. Scare the living daylights out of you. Anyway, let me pass over to David.